Welcome back to Trading Hour on CNBC-TV18. Now we have Chakri Lokapriya, who is the Chief Investment Officer of Equities at LGT Wealth, joining in with us to talk to us about the market fundamentals. What are the sectors that he's looking at right now? Chakri, good afternoon. Good morning, actually. Thank you so much for joining in with us on the show. Markets have seen a bit of a run-up this week. How are you seeing it in terms of valuations right now? Is it a good time to enter the markets right now? And if yes, what pockets are you looking at?
Good morning, and thanks for having me. In terms of the market, we believe that it does offer fairly sensible valuation entry points. It hardly trades at about 20-21 times, which is a very reasonable number in the context of the growth. And it's clearly that after all the estimates have been cut, still the market earnings are likely to grow between 10-12%. And even if it grows into that earnings, still that offers sufficient upside.
Chakri, good morning. Thank you for joining in. On the cusp of another earnings season, you're mentioning that earnings recovery could start in another couple of quarters. So it would be fair to say that you should keep your expectations tempered down for the current quarter as well, because a lot of people anticipate that this year, FY26, would be a lot better compared to last year, considering the fact that there'll be a low base.
Good morning. No, that's a good question. In terms of what has happened is, as we all know, RBI has done a very good job in cutting rates and therefore created a base, not just cutting rates, but also provisioning norms for the banks, injecting liquidity. All these good things have brought down and bringing down rather the cost of funds. This will help either both the corporate, the consumer, as well as the government to start spending. So for them but the tariff situation is still pending. So as companies gain more clarity, they would firm up their plans. That's the reason we believe that an earnings recovery is probably at least another quarter or two until the tariff clarity emerges.
Chakri, I want to understand your thoughts coming in also on these defense names. We have seen the run-up, but there is a lot that's happening on the defense side. And, just yesterday, the NATO alliance also came in with an announcement of increasing the spending towards defense. Do you think defense is something as a story that will continue, given that the run-up is already there? Valuations seem a bit more higher. Is that a play that you would look at?
No, you're absolutely right about defense. If you recall, maybe about 3 years ago, nobody talked about it much. There were one or two companies. Today, the face of defense in itself has changed. Defense involves not just making tanks and guns and missiles, but also involves a huge amount of technology. And India has done a good job in using those technologies in making anti-drone, anti-missile technologies. And now with NATO joining, saying that 5% of NATO's GDP is a very big number. And India, actually, thanks to the government, is positioned well in the last few years, Make in India. Number of companies have emerged. Today, there's a lot more companies which are growing in that space. Therefore, I believe that still it offers a great investment opportunity.
Still a great investment opportunity, even after the kind of run-up that you've had. Chakri, I was just reading a report on the pipe sector that has come out today from a domestic brokerage house, and they're mentioning that there are 3 companies that are poised for very significant growth over the next 3 years. Would pipes be an ideal real estate proxy to play as a theme? Or would you look at some of the other themes as a real estate proxy, be it cement or be it some of the other sectors?
Pipes and cement, both are real estate proxies. If you take pipes as a sector, it benefits now from real estate and also from agriculture and infrastructure spending. Now, companies like Supreme and Astral are leaders, and they vie for volumes versus margins. That's always been the case in this sector. And right now, what has happened is, with oil prices still on a year, despite the volatility, oil prices are down about 10% year over year. And against this backdrop, their main raw material, which is the PVC, UPVC, which are oil linked, and therefore they would have those not only inventory kind of benefits, they'll also have margin benefits in pricing their products. So this combined with the uptick in real estate infra spending will place Supreme, Astral, Finolex Industries, all these companies in great shape. As far as cement, yes, it is now between Ultratech and Ambuja, both market leaders, both are extremely well placed. And recently you had the Adanis talking about further increasing the capacity of their cement companies. So I think therefore they'll be volume led and less price led, both great opportunities.
Chakri, what are your thoughts coming in on the CDMO players as well, right? Because now that's become a big part in India. We know CDMO players, the benefits that will come in for them as well. Anything you're looking on that front, or overall in the pharma pack, you're looking at maybe other segments?
Pharma as an overall pack still looks okay, but given that we are on the cusp of a tariff announcement, it's supposed to be sometime in July. If that happens, we'll have greater clarity on what are the tariffs and therefore what will be the impact. Right now, the market is assuming a 10% tariff, which was announced 3 months ago, and based on that, it'll have a 4-5% cut. Now, so therefore, if that is true, that is the 10% number doesn't change, then many of the frontline companies like Sun, Lupin, they all look good. On the other hand, CDMO is a far more involved space, growing space, higher margin. But again, we'll have to wait for the tariff impact, and therefore I'll wait and watch.
In wait and watch mode is Chakri on the pharma sector ahead of the impending tariff announcements from the Trump administration. Chakri, thank you so much for sparing time and joining us today. Looking forward to having you more often on the show. Chakri Lokapriya there with his views on the markets and on the sectoral preferences.